Hi everyone, welcome to this video. In this video I wanted to go through a trade that I'm in right now. It's a trade that triggered last week for me. But the reason I wanted to and decided to put a video together is I think it's a really good teaching opportunity for you guys, because this trade is completely discretionary. It's not one that meets my exact strategy, but occasionally when price comes together and the analysis lines up, it creates a situation that for me is a high probability trade, and I will simply trade it based on my knowledge, my skills, and my experience. But the reason is not only just to show you the trade. I want to just show you a trade that I've taken that has a lot of discretion, and discretion can often sound like you're making a judgment call. To some extent it can sometimes even sound like a guess, but I want to show you how I use the strength of price-based analysis combined with my experience to take a trade that I have full confidence in. Now, this is the key point, and the reason for doing the video is quite often when you take trade, especially when you're learning to trade, one of the biggest issues we face is fear and greed. So it's incredible how often when you take a trade, one of these two emotions can kick in. Now, to be honest, they are really heavily interlinked, aren't they? Because greed is a form of fear, because it's a fear of missing out, and it's the fear of giving back profit or having a losing trade that's greed. So they're very intertwined. But the reason that this is so important to highlight as we're learning to trade is this is something we have to continually work on. And one of the ways that I have found I can manage my fear and greed, and my fear of having a losing trade, my greed of wanting too much out of trades, etc., is based on my ability to choose high probability trades. So in other words, the reason I want to show you this trade is this is a trade I am in right now. And even as I'm in this trade, I am 100% completely relaxed about the trade and completely confident. Not necessarily that the trade will win, but that the analysis is good enough to justify the trade, and that's what's important. So in other words, regardless of what happens now with this trade, and you guys can watch it and see how it unfolds, it doesn't matter if it wins or loses. What matters to me is that I have pieced together a high probability trade, and then once I'm in the trade, it's then out of my hands. I've done as much as I can do, and that's all we can do as traders. So let's just go through this one now. This is the euro versus the yen, and what you'll notice for last year, we pretty much did. It was quite a bit of sideways. It was more like one of these type of flag patterns where it had been creating a kind of upward momentum, but it wasn't really trending, because after this initial burst and pullback here, we've pretty much created an ascending triangle. And it's only towards the end of the year, going into November, did we break out of that range that was for the best part of that full year, and then since we've pulled back. So straight away what we can see here is just basic price analysis. In a trending market, price makes a high and pulls back. Exactly what we've got. Now, what have we pulled back into? Well, you can see that at this stage what we have is a 21 moving average at this level here. So we've pulled back into an area of support, because moving averages are a form of support. Now, because I would say 80 to 90% of my analysis is always price driven, the moving average is a nice to have. But interestingly, what I found even more appealing is if I just come back a little bit, you just see that there's this incredibly strong area where we've had these historical highs, and it's just before a solid round number of 14,000. So if we then bring it back forward, what you notice is we make that new high and pull back into that area of support. Now, more importantly, it's not just do we pull back into that area, it's also the reaction we get, because what you notice is, if we zoom in, we push all the way down and push back up so that we don't close below the lower level, and we actually close above the level completely, and that's massively important. That shows that once we come down, the buyers are starting to come in and the sellers are either taking profit or being pushed out of this market. Now, that was the first clue as far as this potential trade came around. But how I actually came to see it is where I always start my analysis is on the daily time frame. So if we just go to the daily, what you'll notice is the daily can give a little bit of a different look. So the market's done the move up that we've seen, and this is the move down on the weekly. But if we actually look at it, in some respects that we've had this trending move up on the daily that's then been broken and we're potentially going into a new trend. What you can see in a similar sense to what we've seen on the weekly is again another type of sort of consolidation stroke down pattern until we finally get quite a strong move and then we pull back into the 21 moving average, the central pivot, and a previous area of recent price. So what's interesting about this, and this is where it drew my intrigue, was when we pull back, we started to show some potential signs of downside. There's almost a reversal candle on the 11th of February. It's not quite, but it's certainly not too bad. We then do quite a move down, so that indicates that potentially some people have started to sell here, but there's not been enough to continue that momentum. Now I've come into this and noticed this round about here. It was round about the Friday or the Monday that I noticed this market. Now, the reason that I'm starting to pay attention is one of the things that pullback traders look for is price to pull back and bounce. And if we don't do that, often that's an indication that the market itself is more likely to go the opposing direction. In other words, it weakens the pullback opportunity. So what then happens is this market starts to consolidate. Now, for those that know me, I am very much a breakout trader, and this is why it interests me, because I could see a consolidation. But it was once I looked at this and I started to see that what we've got here is we've got this sort of downtrend, minor, it's not a major but it's a minor, that we pull back into, combined with the moving average and the centralised pivot. From there we go sideways and then we close through it on the 17th of February. And at that stage I was saying, right, I'm ready to trade this. So it was on the 18th of February I decided to form a long trade. So I opened my position around here with a stop loss and I give it some extra room down here under these lows rather than just the low of the box. The reason I've done that is because I'm looking at this off the daily and the weekly, I want to give it some breathing space, and also because I'm trading this predominantly off the weekly, my target's going to be back up to this area here. Now I'm not going to be greedy and go to the ultimate high, so I'd probably go for just shy of the 14,500 level, maybe 14,450 roughly. And what you'll see is, for me getting in here, I've got a potential profit of about 400 points minus spread and overnight charge, and if I have my stop down here it's about 250 points. So my risk to reward means that I can give my stop that little bit of extra space. So what I've got, just to finish off, if you look at this, on the weekly we've made a new high, we've pulled back into the previous price support, we've created an up bullish bias by finishing above and reversing that initial move down. We've then, if we go to the daily, we've started to consolidate rather than create this continuation down based on the daily's move down, and that invalidated the down trade, which then gave me further confidence to go long. So the reason I'm, as I say, just to finish off on this, the reason I'm highlighting this trade more importantly is, see, because I've had so much information to come together, what I've got is a situation where on the weekly I've got a new high, I've got a pullback into support, I've got a reversal candle. Then on the daily, in fact I can add in the 21 MA as well on the weekly. Then on the daily, I've got a failed pullback. I've got a consolidation. And I've got a sort of minor trend line break. So what I'm getting is I'm getting a lot of confirmation lining up, giving me tick after tick after tick after tick. So what I've got is I am now in this trade. Now you can see that we did this move down after my trigger, so I'm sitting through this. But because of that move, I've then been able to adjust my stop based on my stop management, which means I've reduced my risk. And no matter what happens in this trade, because I've got so much, this is just too good not to take. I couldn't not take this trade. It just all lined up for me. And that's why I can be really relaxed and really confident and reduce my worries, my fear, my greed, because everything lines up. It all is there technically based on price. This is not a specific strategy I trade. There are little parts of my strategy in here, but not my predominant strategy. But there's so much lining up here that this is too good a trade for me not to take based on my analysis. And for that reason, even if it loses, then I'm still happy because it's high probability solid trading that I want to follow. So it's just just to let you see the type of trading that can help you gain confidence in what you're doing, so that, and here's the important thing, so that we can manage ourselves in our trades based on fear and greed, because it's the fear of losing or the fear of giving back profit, it's the greed of trying to get too much. Provided we're reading the market effectively, using our price analysis, and having some at least minor element of strategy in there, at least, if not a full strategy, that's what keeps us composed in the market and makes us solid traders. So I hope that's been enjoyable for you. It's been a pleasure to share, and we'll see how this one plays out. I might do an updated video once we see how it plays out, but this one, because I'm doing it on the weekly, may take some time. But you can keep an eye on it and see where it goes from here. And I hope you can use this within your own learning. Thanks for watching, and I'll see you soon. Bye for now.